Hello, everyone. Welcome to This Week in Economics with Robert Wenzel. I'm Robert Wenzel. Today's topic is why Joe Biden's capital gains tax increase would be disastrous for the economy. Well, Joe Biden is out with a proposal to really jack up the capital gains tax. We're still at the headline uh, level with regard to what what the program's going to be, and we don't have all the details. But at this point, it looks terrible. It's horrendous. The current capital gains tax rate is 20%. He wants to increase that to 39.6%. In addition, there is currently a 3.8% surcharge, and he would keep that. So that would be a total tax on capital gains for the highest tax brackets of 43.4% versus now a capital gains tax rate of 20% and a in the surcharge of 3.8%, which is brings it to 23.8%. Now, Biden's justification for this is that income taxes paid by the average man are higher than the current capital gains tax. And that's true. There are many people that are paying a lot more than 23.8% in terms of taxes. So he wants to change that and increase the tax on the super wealthy. Well, I have a problem with that. What Joe Biden is saying is that, say, there's most people are in rowboats every year, just trying to survive, make a living that way. But you shoot them in the foot every year. That's the tax. You shoot them in the foot. So Joe's proposal is, hey, I feel for you. I'm going to shoot the guy in the luxury boats and the yachts now too in the foot every year. Well, that's not the way to help people out. What you do is you eliminate the shooting in the foot. You lower taxes. Government is too big. There's too much going on with government. You don't do it by shooting some other guy in the foot. How's that going to help you? Now, you have to understand whenever money is taxed and it goes to the government, it creates all kinds of problems. There's a distortion if you're giving it to people who aren't working, it creates more incentive for those people not to work. If you give it to a government agency, well, then you've got the top down problem of distribution of that money. When a business sets up in a free market, the consumers have the deciding factor determine what business survives and what business doesn't. If they like the products, they buy more. If they don't like the products from a given company, they stay away. And those businesses will go out of business. But when it's a government agency, you don't have that check of the consumer. It's the person who sets up the agency and the top people in the agency that determine where that money goes. And inevitably, that money eventually will end up with those closest to those in power. It's the way the structure works. It's crony capitalism, it's not free market capitalism. And so the more money that goes into the government, the more you get these distorted situations where there are incentives for people not to work, and then for agencies to create fiefdoms where money goes to the favored people instead of what the consumers want. So you're not only taking buying power away from the individual when you're taxing, you're also creating a situation where the money is going into unproductive sources compared to what the free market would do. That's by definition, that's what happens. Now, on top of it, there's kind of a little bit of this Marxist hate here, that there's this struggle between the wage earner and the capitalist. And that just doesn't exist. The cultural Marxists, the Frankfurt School that's pumping up all this, was the major uh, influence behind cancel culture and cultural Marxism and all that, they recognized that there was no struggle, that the laborer would never revolt against the capitalist because they were getting too fat and happy. They were making too much money, getting too many products. Life was good. So that's why they started this nonsense about the Cultural Revolution. But in the minds of many, they don't make the connection that that means that the original Marxist claim of the struggle between the laborer and the capitalist never happened. And the top Marxists recognize this. But that sort of hint of that struggle goes on. And that's what part of what Biden's doing here is saying, well, I'm going to get the capitalists now. But the capitalists are really the last guys you want to get because they are the ones that are directing money into the capital system where goods and products are made. If you take money away from them, if somebody's made a profit by recognizing good opportunity and sells it and wants to put it into a new opportunity, you're really preventing them by taking away essentially 50% of the money, 45, 50% of the money. Why would you want to do that? Why would you want to do that from the people that are most perceptive at recognizing what products, goods, and services can be delivered and cutting them off from the flow of money and putting it into nonsense that we know is not productive? But that's what you're doing. And it gets worse than that because if a capitalist sells an asset that's also been pushed up by inflation, you're not only getting at his profit from what he recognized from that opportunity, but you're getting at the base, the fundamental money that he put into it, because he needs that just for the buying power to maintain his capital foundation. So if you're taxing him based on an inflationary number, you're not only taxing the profit, but you're taxing part of the foundational wealth. So you're really shrinking, not just eliminating new opportunities, but you're shrinking the amount of money that's available overall for the economy. So it's less products, less goods and services, and it's a terrible thing. It doesn't help anybody. It's shrinking the economy. Very, very bad idea. The best thing you can do is lower taxes. Government is too fat. There's all kinds of agencies that can be eliminated and shrunk. But to keep it going and expanding it is really insanity. It's not good for the economy at all, not good for the standard of living, not good for any of us. Thanks for listening. Be sure to check out my website, economicpolicyjournal.com, where I post about the economy Monday through Friday. I talk about economic policy, economic theory, economic personalities. If you're interested in economics, that's the place to go, economicpolicyjournal.com. And I don't stop after the week. I post more on Saturday and Sunday. I keep going. I never stop. That's economicpolicyjournal.com. I'll be back with a new episode of This Week in Economics with Robert Wenzel next week, which hits the wires, the podcasts at 11 a.m. Eastern time on Sunday and 8 a.m. Pacific time. Thanks for listening. Talk to you next week.